Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 2nd of April 2021. Alright everyone, let's get right into it. So, we are back over $2,000 on ETH here. Always nice to see, as at time of recording, we're kind of flirting with it right now, hovering around the $2,000 mark, which is fun to see. But if we kind of take a look at the chart here and kind of look back to what we were at, basically at the end of February, early March, there was that big crash down to like $1,300. So essentially like a month later, we're just, we're back at kind of 2K, and the all-time high right now is about, it's even higher than that, I think, higher than the 2040 mark there. Or am I wrong? I saw 2,100 somewhere. Maybe it was on a different kind of exchange here. But yeah, I mean, 2040 seems like the all-time high on Coinbase at least. So yeah, I guess that's what we're kind of aiming for right now. I mean, it kind of looks like we're going to kind of break through that. The momentum's there. I've seen a lot of positivity around ETH on kind of Twitter and stuff like that, which is really cool to see. But yeah, just I guess like a really great kind of thing to see after, I guess like the brutal kind of brutal March we had. Because, you can see here we kind of recovered, right? And then we just went back down. And we kind of like had this whole pattern play out, this head and shoulders pattern. And then ETH was just like, well, nope. And then just headed back up there. So yeah, awesome to see. But I did want to kind of like mention about just what I said about the sentiment on Twitter, kind of shifting on ETH here. I'm actually seeing people who I don't consider to be like, very heavily involved with the Ethereum ecosystem or anything like that. They're starting to say things like they believe ETH is going to be a better store of value than BTC. Now, this always kind of happens when the price is going up, people shilling their bags and everything like that. But I think, saying something like that takes, I guess, obviously bags, but it also takes kind of like a bit of courage, especially if you have like a following that may be like Bitcoin heavy or whatever, that might be thinking, wow, you're crazy for saying that. Because, to Bitcoiners, that is crazy, but I don't think it's crazy. I've explained many times why I think ETH is a better store of value and he's better money and he's just better at being, Bitcoin than Bitcoin is. And that's got a lot to do with the fact that we have EIP 1559 coming, which is going to lead to the fee burn. And then once the merger happens, we're going to have, proof of stake issuance, which is going to be kind of perpetual issuance of less than 1% a year. And, that would secure the chain in perpetuity. And then we have the fee burn to basically get to, you all would have seen the ultrasound money meme about like having a deflationary ETH. So from that point of view, I believe ETH, and that's not even to kind of like talk about all ETH's kind of other utility within the network, right? It's used as trustless collateral, it's used to pay gas fees, it's used as money, all that sort of stuff. That's all additive. So from that point of view, ETH not only has a better monetary policy than Bitcoin, and I'll straight up say that, I think ETH has, once EIP 1559 goes in and once the merger happens, ETH's monetary policy will be better than Bitcoin's. So not only does it have that, but it has more utility as an asset as well. So I do fundamentally believe that we're going to see ETH be more valuable than Bitcoin one day. That might take another few years, just because Bitcoin has a lot of momentum behind it still. A lot of people kind of like don't understand, what ETH is as an asset and everything like that. But kind of like that's what opportunity, all of you have, right? All of you kind of like spending time in the ecosystem now have the opportunity to kind of like, I guess, extract this alpha before other people do. And, I think from that point of view, it's not obviously investment advice, but this has kind of like informed my whole thesis around ETH, like the utility aspect of it. And, you see a lot of Ethereans talking about this saying, Bitcoin is good for what it is and does have some utility, right? The utility is basically that people buy it and consider it a store of value because the monetary policy is sound to them, which sound to them basically means it's unchanging, it basically has a cap and, it halves every 4 years. And that's fine. I can totally understand why people see the value in that. But for me, I see more value in ETH through its utility. And it also has like better properties than Bitcoin than what Bitcoin does for itself. So from that point of view, still stacking ETH, right? Still kind of like loading up, making sure that I replenish the things that I spend on gas. That's the most annoying thing, is that there's a lot of ETH that gets spent on gas and then you have to kind of replenish your ETH. So I try to do that every few days. But, I do hope that we have some more adoption on meta transactions here. I would love to be able to pay the gas fees in like a stable coin. They would still be paid in ETH ultimately, but so I wouldn't have to give up my ETH. The way it works is basically the stablecoin would make a kind of like a trade from like a pool of capital for the ETH and then pay the kind of like miners. Maybe that's that's not economical right now with the high gas fees and things like that. But yeah, I mean, giving up ETH is always a bit, you know, a bit hard to kind of digest sometimes. But anyway, enough shilling about ETH. Good to see it, you know, I guess like almost back at all-time high. Maybe by the time you watch this, we'll be at all-time high. But 2,000 was a pretty cool level to break again. We hadn't seen this price since the 20th of February, around that. And we didn't last there for long, right? And then since then, we didn't see it ever, because that was the new all-time high. So yeah, really, really cool to see that. I'm glad to see that ETH recover. I mean, look at this. It basically took us like a month and a half to get back here. So not that long, but obviously feels like an eternity because we're all stuck to our screens and things like that. But yeah, kudos to everyone kind of like that held through this. I think, you know, you've obviously been rewarded for this. I know a lot of people like panic, and especially the newer investors, and they sell into this like, okay, is the bull market over and things like that. And I totally get that. I used to do that when I was a noob as well, you know. But I think, you know, just stacking and just like riding the volatility is the best way to kind of play this sort of stuff. All right, an interesting announcement from Dharma here today. So they kind of like qualify this announcement saying that this is not an April Fool's joke, but they've introduced something called Gas-Lite, which is basically a way that they've come up with for their users to automatically save up to 80% on network fees when they deposit kind of like funds into yield protocols from your bank account. So basically the way this works is that they've got a pool of capital that they've set up called the trade reserve. And then when you deposit funds through your bank account into Dharma, to buy USDC or something like that, they take that USDC from the trade reserve and deposit it into Yearn, right? And essentially like give you the kind of yield, but your funds are essentially it's a custodial thing here, where they're locked for 5 days, and then you get the funds kind of like to your own wallet after 5 days, once the trade reserve is kind of replenished here. So essentially, this is like, I guess, a bridge or like a proxy between kind of like you, the user, and the yield farm kind of like protocol here. So that's why it's not non-custodial, you know, for the first 5 days here. But that's how they achieve this kind of 80% reduction in gas fees, because they're kind of doing this kind of, I guess, trade reserve thing where they're pooling user funds together and then depositing them, so they only have to pay kind of like that one gas fee. So really, really cool. I mean, I wrote more about how different teams and different protocols are kind of optimizing themselves on layer 1 to use less gas. I wrote more about that in the newsletter today, so you can go check that out. But yeah, I mean, I guess like I can give a TLDR of the newsletter here. Basically, the way you reduce gas fees on Ethereum, well, at least one of the ways and one of the best ways, is to pool the capital. So this is what Dharma's doing here. You know, Yearn does this themselves. So if you think about Yearn as being like a yield farming protocol with vaults, the vaults are essentially just wrappers around users. So what ends up happening is that, you know, 1,000 users might donate, might put money into a vault, right, and to earn yield, but that vault will only ever have to pay one gas fee for itself. Whereas, you know, to do different on-chain actions. Whereas if 1,000 users wanted to do different on-chain actions, that's 1,000 gas fees that have to be paid, right? Each user has to pay their own gas fee. So essentially, this pooled capital and this kind of like wrapper around users is the best way to kind of save gas here. There's also other ways, like developers optimizing their code to use less gas and things like that. And, you know, coming up with innovative ways to, I guess, like lower the gas fees across the board here. But yeah, cool to see Dharma, you know, kind of do this. I think it's very important, I guess, for the maybe short to medium term, because I do believe, as I've said before, that we're all going to end up on layer 2, and layer 1's just going to be a settlement layer, so it won't really matter at that point for end users. But still, great to see kind of like these short-term solutions coming out here. So Hermez Network launched, I think it was last week, they launched on mainnet, and they're growing quite steadily right now. They have 1,158 total wallets created since then, which, you know, may seem like a small number, and it is, but to me, you know, people might think this is bearish, and I like to think to myself, like, how is this bearish, right? The fact that we've only got, like, you know, at most probably, I guess, like, using DeFi at this point, there's probably been like maybe 100, 200,000 kind of like people that have interacted with DeFi, or maybe 300,000 or something like that. But it's definitely not near 1 million, I don't think. So if you think about it like that, it means that like there's still like tens of millions of people left to come in, right? So from that point of view, I don't see how like this would be bearish. It's actually really bullish. But you know, Hermez, I guess, like is completely unknown. Like I'm sure a lot of you weren't even aware of this until I mentioned it on the refuel. I didn't actually know about them till a few weeks ago, or at least maybe a couple months ago, when they first kind of announced themselves, and they kind of came out of nowhere. So yeah, I mean, I think it's just really bullish because the growth prospects are there. And just to refresh what Hermez is, it's basically a layer 2 scalability solution, similar to ZK Sync. It's basically focused on payments. So that obviously is going to get a lot more traction here, you know, over time, especially, and more adoption. So I consider this to be bullish, but that's not me kind of saying go buy their token. They do have a token. I don't own it. And you know, that's not me saying go kind of like ape into it, so to speak. But that's just me saying that, you know, these numbers may look kind of bearish on the surface, but the thing is that we know how fast this stuff can grow. I mean, I've mentioned before how just last year in May, Uniswap was only doing $10 million of 24-hour volume, right? And now they're doing billions of 24-hour volume on some days. And, you know, some days they're doing more volume than Coinbase. So this stuff has like growth prospects that are unseen in any other kind of technologies because of the fact that it's global, right? It's accessible to anyone and things like that. And I think obviously the high gas fees has put kind of like a cap on how many new users we can port in. But as I said, you know, in my newsletter and yesterday about, or maybe the other day, about kind of like how layer 2 is going to usher in a new wave of innovation. It's also going to usher in a new wave of like users, because there'll just be more users that can use Ethereum now. So yeah, I expect to see these blow up, you know, over time on Hermez here. I don't expect it to stay like at, you know, the thousand mark for very long. So yeah, kudos to them. I think they're doing a really great job. I would love to see more kind of adoption here over the coming months. So Coinbase basically announced earlier, yesterday now, not earlier today, that their S1 registration with the SEC was effective, and they expect their IPO to happen on April 14th, 2021, which is 2 weeks away, right? And this is why I think this is a major reason why I think April is going to be a big month. Leading up to April 14th, we are probably going to see a lot of the crypto market trend up, because Coinbase the Coinbase IPO as an event, right, for, I guess, like the wider kind of outside crypto space is absolutely massive. Coinbase is going to open at $100 billion plus market cap. As far as I know, they're the first publicly traded exchange, at least the first publicly traded exchange in the US, right? And they're going to make a lot of noise. I think, you know, if they actually end up being worth more than some banks, that's just like a huge narrative there, saying, you know, Coinbase is this hot fintech company, but it's not just fintech, right? It's crypto, and it's kind of worth more than a bank. And then I don't know. I just think that not only leading up to it will we see like a nice kind of trending up across the markets, but also after it, we're going to see like a kind of pretty big inflow of new users, I suspect, as well. And I'm very curious to see if we see kind of like a repricing in the ecosystem. And I've talked about this before, how I think that, you know, if Coinbase can be worth $100 billion plus fully diluted market cap, then why can't Uniswap, right? Because Coinbase, almost all of their revenue comes from trading fees. Yes, they have other businesses. They have their custody kind of thing. They probably have some market maker stuff. They have some venture investments that they make. But the majority of their revenue comes from trading fees. So same with Uniswap, right? Pretty much all of Uniswap's kind of revenue comes from trading fees. Now, of course, Uniswap doesn't pay out those fees to token holders yet, but that doesn't really matter. You know, I'm not sure if Coinbase is going to be paying out kind of like dividends to their shareholders here, to people that kind of like own the stock. But I think the same kind of thing applies here. And that's not to say that, you know, Uniswap is definitely going to a $100 billion valuation, but I do think we're going to see a kind of like repricing in the AMM space, you know, or the general kind of exchange space on Ethereum. And that'll kind of like float into other DeFi kind of protocols as well, like non-exchange DeFi protocols, because the world is just going to wake up to this. They're going to be like, you know, why is this Coinbase company that is really big, right, and still has growth prospects, but is being disrupted by DeFi, why are they going to be worth like 100 billion plus and DeFi protocols can't be? So I fully expect that to happen, you know, in the coming months. You know, it's probably not going to happen all at once or anything like that, but we've already seen Uniswap get up to like a $40 billion, I think, fully diluted valuation. So another kind of like, you know, a bit more than a 2x from here would put it at 100 billion. So not too far-fetched, I don't think. So I saw this article on CNBC today, and I was very late to this. Once I posted this tweet, I ended up seeing this all over Twitter. But essentially, Mark Cuban was featured in this article, and he said he owns a lot of Ethereum because, well, I mean, his quote was, "I own a lot of Ethereum because I think it's the closest to a true currency." So not only is Mark Cuban here saying that he thinks that ETH is money in so many words, right? It was also the #1 trending article on CNBC, as you can see here on the right-hand side of my screenshot. And like the article itself was obviously read by a ton of people. Now, I think this coupled with like the Visa news, coupled with, more and more positive news coming out for ETH, it's not surprising to see ETH kind of, I guess, going up in price, right, at the end of the day. This kind of stuff just validates ETH in the mainstream's eyes. I mean, I've said it before, but Mark Cuban is an incredibly popular kind of celebrity in the US, very US-centric. I don't really see much people outside of the US kind of like they know about him, but like it's not like they kind of like follow him too closely. But obviously very popular in the US because of Shark Tank and because of a lot of the stuff that he's done over the years or over the decades, essentially. Billionaire investor, right? Great narrative behind him. So for him to be so involved with the Ethereum ecosystem and just basically saying he owns a lot of Ethereum is enough for people that don't own any crypto to basically buy ETH. That's as simple as that. There are people that do this. There are lots of people that look for signals, from people that they follow to buy into things. So I think that's what's going to happen here, definitely, and I think that's going to lead to some very nice, bullish action for ETH. Again, not investment advice, but man, it's hard not to be bullish on ETH right now. But yeah, I think, and I'm really glad that the word Ethereum was in the title of this, right? Because you remember the other day when the Visa news came out, the mainstream media, for some reason, just like avoided saying Ethereum. They even went as far as saying like Bitcoin partner. I was like, what? Right? And the fact that Ethereum is just right smack bang in the title there. I mean, the times are changing, like everyone. The days of like Ethereum being relatively unknown and being like distant second to Bitcoin are coming to an end. I do think that, DeFi, NFTs, right? Like the DAO space, the creator economy in kind of like the social token space, all this sort of stuff. These celebrities buying ETH and public companies buying ETH. Man, I just think that Ethereum is entering a new age here. It is coming out of its basically, startup phase, which I do believe it was still a startup up until recently, into like being like a pretty big powerhouse here. Not only in how much kind of like revenue it generates itself, right, which will soon be going to ETH holders with the 1559 burn, but also with how much economic activity it kind of creates for all the other kind of stuff on Ethereum, like the DeFi tokens and things like that. Which, ultimately flows back to ETH, especially when we have fee burning, because every transaction on the network will have to burn a bit of ETH, which is incredibly bullish. So the more activity on ETH, the more kind of fees that are burned, and the more value that inevitably flows to ETH. So yeah, we're entering a new age, friends. I really do believe that, and I'm always bullish, but like these days I'm just like constantly waking up and being like, holy crap, what happened today, right? Where's Ethereum kind of like today? And as I said, the sentiment on Twitter is changing. It's much more positive. People are actually considering ETH as a contender to Bitcoin's throne, which is something that I would never have seen some people say. And I actually listened to the Bankless podcast with Hazu the other day on EIP 1559, and Hazu is, started in Bitcoin, made his way to Ethereum over the years, and has been very involved with 1559. But he basically said that ETH with 1559 and POS issuance essentially kind of rivals Bitcoin's monetary policy. So for him, someone who's spent like so much time in the Bitcoin ecosystem and done so much there, someone who's not a quote-unquote Ethereum maximalist or, a very hardcore Ethereum, someone who I consider relatively balanced but very intelligent, for him to say that is a huge kind of like, I guess, vote of confidence, I think, of what, and a huge kind of like, I guess, a stamp of approval on the stuff that, a lot of us have been saying over the years. A lot of us in the Ethereum ecosystem have been saying this since ETH was like $100, right? And for now ETH is $2,000, and people are finally cluing into this. So yeah, I think it's really, really positive, and I find it hard not to be very bullish right now. So there was a ETH1 to ETH2 merge implementers call that happened last night. That was basically a call between a bunch of different ETH1 and ETH2 developers discussing the ETH1 to ETH2 merge. And Nethermind had a tweet here that basically says, it seems like the devs can see a clear road to the multi-client ETH1 to ETH2 DevNet, which will be used during the Rayonism and ETH Global Scaling Hackathon this month. Now, I talked about what Rayonism was a couple of days ago. It's basically a project to essentially do an ETH1 to ETH2 merge testnet, from end to end based on the spec that would be used for the mainnet merge. This is really like happening, guys. Like, this is so close now. I mean, I keep saying that I wouldn't expect it to come by the end of this year, more so like Q1 next year, but that's still incredibly bullish. Like, we could, we're going to have 1559 in July, and then once we have the merger by the, in Q1 next year, most likely, that's it, right? Those are like the biggest upgrades to Ethereum, and they're not upgrades that are just based on narratives, right? And they're not kind of like upgrades that are based on sell the news events where everyone's like, okay, well, this happened, now I'm just going to sell all my ETH. They're upgrades that basically add value to ETH directly, which is just incredible. We get off proof of work. Stakers are now kind of like the people involved in the ecosystem. The stakers, kind of like any of the fees that they earn on top of like the fee burn, I do think they're going to restake that, right? And all the kind of rewards, or at least most of the rewards they earn, are probably going to be restaked as well. So basically, a lot of the ETH selling pressure evaporates from miners. And a lot of the, with 1559, obviously a lot of the kind of like fee revenue goes back to ETH holders as well. So yeah, incredibly bullish on this merge happening sooner than people think it will. Some people still think it's like, 18 months away or something, or like 24 months away. I definitely don't think so. I think that the ETH1 and ETH2 teams are running like well-oiled machines right now, and that's due in large part to the coordinators playing a huge role here, like Tim Byko and Danny Ryan on either side of the fence, but also, I think we have this very, very clear vision with where we want kind of like Ethereum to go. Everyone kind of agrees with it. Everyone sees the vision where the proof of stake chain that we have right now is the consensus layer. And then the ETH1 chain, once it merges in, is the kind of application layer. So we'll have proof of stake validating the transactions happening on that ETH1 chain, and that'll become like one whole Ethereum. And then we'll have sharding, sometime hopefully next year, which kind of just like supercharges the layer 2 ecosystem that's building on top of all of this stuff. So super, super excited to see Rayonism kind of go live. As I said the other day, I'm judging this scaling hackathon, the scaling Ethereum hackathon that's happening from ETH Global here. So very excited to follow along with this project as they kind of build it out. It's getting close. It's getting very, very close. So the Ethereum Cat Herders rather, put out this kind of like post where they've got like an Ethereum Berlin upgrade countdown community call happening on April 15th, 2021, which is tentative, which is essentially when the Berlin upgrade will be going live. So this is a live stream community call that will start 45 minutes before the estimated time that the fork goes through. So, anyone can join this, and you can kind of like watch it on YouTube and things like that. And there's got like a bunch of resources about what Berlin is here. So if you're interested in kind of like, I guess, watching along or following along with this with a bunch of like-minded Ethereum people, this is the place to do it. So definitely go check this out. So interesting tweet here from Devon DeFi, who spends a lot of time in the Index Co-op here. The Index Co-op basically put out a proposal to create a Synthetix debt pool mirror index here. Now, what is this? It's basically a way to mirror the debt that, or at least like the SUSD debt on Synthetix. So I'll explain how this works. Basically, when you stake your SNX tokens on Synthetix to earn rewards, you mint SUSD, which is a synthetic asset. Now, with that SUSD, you can either trade it for other synthetic assets like SETH or BTC or things like that, or you can keep it as SUSD and keep it in your wallet, or you can go yield farm with it. But the thing is, if you keep it in one synthetic asset, you're essentially exposed to the global debt pool. Now, what this means is that as the global debt pool shifts around, if ETH goes up in price, you can end up owing more SUSD because the debt pool's weights have kind of like rebalanced underneath you. So your debt actually grows. Now, what this debt mirror kind of like pool aims to do is essentially dampen this kind of like volatility here and dampen this in a way where it kind of mirrors the debt pool and essentially does the reverse of what what the debt pool on Synthetix does. So if the debt pool on Synthetix is rebalancing in one way, the debt pool mirror on the index comp will rebalance the other way. So essentially a mirror, right? And what this does is it basically, if your SUSD is in the debt mirror pool, it essentially tracks, the opposite of what Synthetix is doing, so that your debt doesn't really grow, right? Or kind of like shrink. You just basically stay flat. That's the goal of it. I know DHedge already has this implemented as well, and it's been quite popular. But the index corp wants to have a go at this too and kind of implement this here. So yeah, I look forward to seeing this kind of implemented, because I think it's a big deal for Synthetix stakers. I think a lot of people maybe aren't even aware of the fact that the debt pool shifts underneath them, which essentially exposes them to this additional kind of like, I wouldn't call it, maybe it's not a risk, but it's more like the risk that you end up owing more, kind of SUSD later down the line. So Charm kind of put their Cube tokens live on mainnet yesterday. Now, what these Cube tokens are is that they're essentially leverage tokens. So you can buy one of these for BTC, ETH, Aave, Link, Uni, or Yiffy. They say FYI here, but I assume that's Wi-Fi, and get 3 times leverage. So when you buy the ETH token, you're essentially buying a 3 times leveraged ETH position. Now, you may be familiar with this from the index corp. They have the FLY, or the flexible leveraged index, which does the same thing, except it's a 2x leverage position, whereas Charm is giving you 3x leverage here on a bunch of these tokens here. So yeah, if that's something you're interested in doing, you can go check it out. And it's funny because this is like, I guess, like leverage on autopilot, because the protocol handles kind of like the liquidation ratios and all that sort of stuff, or the collateralization ratios, I should say, sorry, and the liquidation points and things like that. But essentially, if you're, and this isn't investment advice, but if you're bullish on like ETH, right? Like really bullish on ETH, you think to yourself, okay, ETH's going to double in like the next month, for example. Well, wouldn't it make sense for you to kind of like increase your exposure by buying one of these leverage tokens, right? Yes, there's more risk. Yes, there's like, the biggest risk is that you get liquidated because the protocol doesn't handle the collateralization ratio correctly, or you kind of like magnify your losses. Because if you take on leverage, you magnify your gains, but also kind of like can magnify your losses if you kind of like get liquidated and things like that. But, because these kind of things are managed automatically, liquidation risk is, ideally relatively low compared to if you're doing it on your own and stuff like that. But anyway, outside of that, if you're really bullish and you think it's going to double, you can leverage up 3 times here with these tokens, or with the flexible leverage index, the FLY from Index Corp, which does you a 2x, and essentially get like 2 times or 3 times the exposure. So if ETH goes double, right, it's essentially like you got 4x exposure from this sort of thing. So yeah, that's, again, I wouldn't suggest doing this if you don't know what you're doing and you aren't aware of all the risks. As I kind of mentioned, the risks are that the protocol fails to kind of like keep a healthy collateral ratio, you get liquidated, or you magnify your losses because you didn't place the bet correctly in ETH for some reason, just dumps 30% or something. That can happen. Even as, even the fact that we're near all-time high again here, it doesn't matter. We can dump 30%, right? I think it's a mistake a lot of people make, is that they get really, really bullish over the short term and they think, there's no way ETH can dump here. I'm just going to leverage up. And then what ends up happening is that these people get liquidated in mass, and we see those billion-dollar liquidation figures come out because people just got too greedy. And then we have to reset the cycle again, where we have like that dump, and then slowly we move back up. And that's kind of like what contributes a lot to this volatility is the leverage, because people just get too greedy, right? And there's just a lot of retail investors who just aren't aware of the risks, and they see kind of like ETH going up really fast and they get FOMO. They're like, I need to get more kind of like exposure to ETH. So they'll leverage up, and then, the spot market will just like dump underneath them, and they'll get liquidated, and, we kind of see those cascading liquidations sometimes. So yeah, definitely be aware of the risks. Don't become too overexposed to this sort of stuff. Maybe just throw in some kind of like a small position to test it out to see how it all works. But yeah, definitely always be kind of aware of the risks here. So Gitcoin posted a Gitcoin Grants R9 governance brief, which is basically a blog post going over round 9, everything that happened there, the stats on I guess like the crowdfunding stats, like the contributors and the matching and everything like that, who kind of like won each category in terms of like the most amount of dollars matched here. I'm actually curious. I haven't checked this yet, but I'm curious to see if the Daily Gwei, yes, it is in the top 10, and ETHUB as well. So ETHUB is 5th, Daily Gwei is 7th. That's really, really cool to see. That's awesome. I mean, thanks again everyone for donating here, but it's really cool that you know, both Daily Gwei and ETHUB made it into the top 10 there. So that kind of definitely warms my heart there. I'm curious to see what other ones kind of measured up here. So DAO Square got first for East Asia grants. For infra grants, it was Ethereum Swarm, and then Gitcoin Grants is second. Umbra, which is a privacy protocol, third. NFT grants, POAP came in first. That's awesome to see. I mean, a lot of you would know what POAP is and how awesome they are. And then DApp Tech grants, Ether Drops came in first. APY Vision, Civil Finance, VFAT Tools, things like this. Yeah, so cool to see like the leaderboards there. Then they went over kind of like a governance brief here about, I guess, like, I think this talks about basically, I haven't read through it myself yet, but basically how they've done governance for this round in terms of like, I guess like how they manage like the payments, the quadratic funding, kind of like making sure that it's done in a public goods kind of way, where I saw, you know, you would have seen on Twitter a few projects had tokens associated with them and they pulled out of the matching because of that. And then if you scroll down here, they go over the Sybil attacks that happened in round 9. The impersonation that happened, bribery and stuff like that, and non-Ethereum related projects kind of like spinning up on here and all that sort of stuff. And airdrop harvesting. This is a big kind of theme of this Gitcoin round, I think. A lot of people donated to projects simply because these projects don't have a token yet, and they think they're going to get an airdrop, and you know, maybe they will get an airdrop because of donating, you know, to these projects pre-token. So that was a big theme. And then there was a bunch of like an overview of the fraud deterrence that happened in round 9 here. And then to kind of like finish off is like how they did the review and how they ratified all the results here. So really lengthy post here. I definitely recommend going and reading it to get the full overview. But yeah, I mean, grants round 9 was obviously the biggest grants round. Look at this. Look at the growth, right? That's grants round 8 with 4,730 unique contributors. Grants round 9 is, I think it's like, oh, it's not showing me the exact figure here, but it's over, yeah, it's over 12,000. So yeah, basically almost triple, I think, from here, which is just absolutely awesome to see. I think we can keep going with that, especially as, you know, I guess more people become aware of Gitcoin. We get more new users in here. You know, 80% of the people that donated were using ZK Sync as well, so using layer 2 there, which is really, really awesome to see as well. So yeah, thanks again everyone for donating to the Daily Gwei, of course, and ETHUB, and also to just donating to all the other projects in general as well. It's a very, very noble thing to do, and you've funded a lot of projects for, you know, potentially a few months now, depending on kind of like their burn rate, but definitely really, really cool to see. All right, everyone, thank you again for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all next week. Thanks, everyone.